What's going on, guys? We have some recent news to talk about regarding GameStop. And I just love this title. GameStop rage quit 1,000 stores. Now it's betting on Bitcoin. Will crypto be its ultimate cheat code, or is the game over? Now, a lot of people are saying they need to take a page out of MicroStrategy, but here's something you may not know. GameStop, in certain instances, that's the key point, has outperformed MicroStrategy, and I'll show you in a second. But getting into this GameStop news. So GameStop obviously was part of the whole AMC Wall Street bets hype, absolutely rallied in 2020, 2021. Because of a lot of that hype, companies like GameStop and AMC have been able to build up big cash balances, taking advantage of share offerings when there was hype. Despite that, over the past year, they've shut down 1,000 locations, with more closures coming. 10 years ago, GameStop had around 6,000 stores. Now they're sitting right around half that. The board has unanimously approved a strategy to where they will buy Bitcoin. And I think this analyst sums it up pretty well. The pivot to Bitcoin is really a defense against irrelevance. It's an odd thing, as it's basically saying the strategy isn't retail, but to act as some kind of cryptocurrency investment vehicle. Now, while I agree with what the analyst is saying and what he's trying to convey, at the same time, I believe GameStop is making the right move here. What else are they gonna do? And of course, they mention MicroStrategy here because that's basically the company to look up to or cite when other companies are considering Bitcoin. MicroStrategy, thanks to Bitcoin, has seen its stock go up 3,000% since 2020. And we'll look into that in a second, and I'll show you something that might blow your mind. It's kind of funny that they cite this performance from MicroStrategy. Now, right here we have MicroStrategy, and this is starting from the 2020 lows. We know what happened during that time, and MicroStrategy bottomed out at about $9 there. From there to MicroStrategy's current price, it has done a staggering 3,500%, and from the 2020 low to top, it has done almost 6,000%, specifically 5,850 or so. By comparison, GameStop has outperformed MicroStrategy from the 2020 lows. GameStop has done 4,000 to where it is here, from almost the 2020 lows. I didn't even go that low. And going to where GameStop topped out at, not its ultimate top, but where it topped out at late last year, you're talking about like a 9,000% return. Yes, GameStop has outperformed MicroStrategy from 2020. And it's just kind of funny that the company cites MicroStrategy and that 3,000% gain from 2020 when GameStop has outperformed it, despite just now considering Bitcoin. That starting point aside though, MicroStrategy has outperformed GameStop, but I just kind of found it interesting that from the 2020 bottom, GameStop has actually outperformed MicroStrategy. Either way, both of these companies had massive gains from 2020, but when you go to other timeframes, it isn't as peachy. For example, from the end of 2022, which is basically the crypto bottom, the bear market bottom, crypto winter, GameStop has done like 84%, 85% from 2022, the start of 2023, let's say. Meanwhile, MicroStrategy from the end of 2022, start of 2023, here it is, has done 2,300%. So on the shorter term, MicroStrategy is a winner. Maybe with GameStop getting into Bitcoin, or not maybe, it's very likely, it's not a maybe, it's going to likely follow Bitcoin cycles from here on out, depending on how large they consider getting into Bitcoin, how massively they want to get in. They're sitting on like 4 billion in cash. I don't know if they're going to put it all in. I would like to see them take a slow and steady approach, 100 million here, 100 million there, slowly building out their position, not just going all in right here, right now. But what do you guys think would be GameStop's best move? Should they just put all their cash balance into Bitcoin? Should they put half into Bitcoin, half keep as cash? Or should they just kind of DCA over the rest of this cycle or over the next couple of years? And do you think this is a smart move by GameStop? I personally do. I don't know what options they have other than doing this. You know, I mean, when something like Steam exists, when you can just go on Amazon and have a game shipped directly to you, or when you can go on Steam and just download a game right then and there, who's using GameStop? And you know, I might actually have gone to a GameStop in the last year or so if it wasn't for the fact that they don't exist in my area. The GameStop in my town has shut down and it turned into a nail salon. The GameStop in a town over shut down. I don't know what it turned into, but the point is it shut down. And while I used to love going into GameStop, being able to look at the games, physically hold them and look at them, look at the backs, maybe get some good deals on some used games, the reality is it's so much easier to just go on Steam, get some good game on a good discount from Steam, or hit up Amazon and have your game delivered probably the next day. Their business model in a lot of ways has been disrupted, and I do personally think this is a good step from GameStop. I think this is a good idea. They have now joined the orange side. Now let's move on and talk about spot Bitcoin ETFs. We've been seeing inflows pretty consistently lately. 8-day inflow streak. Bitcoin's pretty flat, if not a little down today. Things could of course recover. The day is still somewhat young, but it is nice to see an 8-day inflow streak after so much outflows throughout a good part of February and the beginning of March. On March 25, we had a modest inflow of $26.83. What? Only $26.83. What? This is the first streak of this length in 2025? It might sound great. What? It's a drop in the ocean? I swear these AI articles are driving me crazy. BlackRock's IBIT saw a $42 million inflow, which puts it at $39.8 billion in net assets, net inflow actually. Bitwise's ETF BitB posted the highest outflow of 10 million for the day. Wisdom Trees saw a 5 million outflow. Before this day, Fidelity's fund pulled in 82.85 million, bringing its total net inflows now to $11.5 billion with 17 billion in assets. Now you might be saying, how are these numbers not the same? And this is because of Bitcoin's performance from the start of the ETFs. The assets has grown at a faster rate than the inflows because the assets have grown in price. Now the current total net asset value of the Bitcoin ETFs is sitting at 99 billion, a hair shy of 100 billion again. And its cumulative net inflow has reached a staggering $36 billion. Now we got a couple more things to look at for Bitcoin, but I wanted to pull up the chart, and sure enough, we are finding resistance on this descending trend line. We've got a trend within a trend within a trend within a trend. And this is our more midterm trend that we still need to break out. On the short term, we're still in an ascending channel. There's a good chance we come down and bounce off this yellow trend line that we have been bouncing off for a good part of this month now. And zooming in even more, these little blue lines that you saw on the other chart, we've been following this channel as well. Just kind of sideways action for the last, 2 days or so. We found a resistance right here of about 88.5, have hit it 3 times. We need to break this to continue, and we need to hold up this roughly 86 that we have bounced off of a few times now. We are heading towards again. This was a previous resistance. We might use it as a support, but yeah, we're in this kind of we've been in this kind of sideways chop as we've been trying to break out of this downtrend. It looks a lot more clear on different time frames, but on the hourly, it doesn't look perfect. Here it is again, so you kind of get the scale. This is that blue trend that we were just talking about, that sideways action that we've been in for only 3 days. But it is a current sideways action trend to watch within a broader uptrend, within a broader downtrend, within an even broader uptrend that started from the beginning of the cycle. The MACD is looking promising on the daily. We got our bullish MACD cross back in mid-March, and we have been in a pretty nice uptrend since then. The MACD on the weekly looks like we are not out of the woods yet, and we may see some more downside. We may see a test of this ascending trend. And looking at the MACD on the 4-hour, we just got a bearish cross after our recent uptrend. The MACD has been kind of rising lately. Looking at the RSI on the 4-hour, the RSI has been cooling off from overbought, and you'll also see something, a divergence. The RSI has been dropping, the price stays the same on the top. Looking at the daily, Bitcoin has been recovering from oversold, and this too was a divergence. This was a bullish one, however. You saw the price go lower, the RSI was picking up, and that did actually mark a reversal. Looking at the RSI on the weekly, Bitcoin is just hovering at that 50. We need to break over and hold it and work our way up, not get rejected on this and head back down. Looking at the monthly, the RSI has come down from overbought, and look at every last cycle. Look at how overbought we became on the monthly on every last cycle. We get up to the 90s. Here's 2021, here's the 2017 cycle, and then here's the 2012-2013 cycle. Bitcoin's RSI didn't get way overextended on the large time frames. This is one thing I'm looking for as a clear sign of topping out. We also have a recent article talking about the Bitcoin miners and how their income has been stabilizing. We've been seeing some getting to profitability again. We've been seeing the revenues grow again after the halving took rewards in half, and they had some iffy quarters going back to unprofitable like we expected, seeing revenue dip like expected, and now they're back to seeing profitability, seeing that revenue growth again. Things are looking good again for the Bitcoin miners. Bitcoin mining revenues hit 3.7 billion in the 4th quarter of 2024, which is a 42% increase from the quarter before that, which was heavily impacted by the halving. That was Q3, which was one of the first quarters that was completely affected by the halving. This revenue uptick suggests miners' incomes are stabilizing after the halving, cutting rewards in half from 6.25 Bitcoin to 3.125 Bitcoin per block. Now that we have almost 1 year since the 4th halving, miners have endured a period of stabilization, adapting to reduced block rewards, tighter margins, shifting operational dynamics. they've been working on improving their efficiency, bringing their joules per terahash from the 20s in many cases down into the high teens, which is fantastic. Efficiency is key in this industry, and that's one reason why I love CleanSpark and Iron so much. Should semiconductor tariffs return, Bitcoin mining could face higher costs, consolidating power among major players, forcing smaller ones to power down. And JP Morgan mentioned Bitcoin miners have been struggling in 2025. Declining crypto prices added further pressure to business models strained by the network's halving. But well-capitalized miners have managed to adapt. In fact, Bitcoin's hash rate broke all-time highs in January. Adjustments have included upgrading to more efficient machines, relocating to regions with cheaper and abundant renewable energy. Also, some Bitcoin miners are going into AI. Now, I also wanted to pull up the hash ribbons, which would have been a perfect thing for them to highlight in that article, but in this article, they do mention it. The hash ribbons recently turned bullish, and here's the buy signal. This signals that Bitcoin miners, after a period of capitulation, are returning to the network, suggesting mining recovery, reduced selling pressure. This often marks a strong buy signal and has historically aligned with the end of bear markets and the start of new uptrends. Now, we do have an event coming up on Friday that's going to be important for the Bitcoin miners and Bitcoin alike, and there's going to be PCE. This is the Fed's preferred gauge of inflation, and it has actually been hovering right around the 2.5% range. It's been basically in between 2.1 and 2.7 for a handful of months. We need to break this trend. We need to, at the very least, get back down to under 2.5%. You'll see that our last read was a 2.5%. The one before that was 2.6. The one before that was 2.4. Before that was 2.3, 2.1. We need to get back into that downtrend. If we can get from 2.5 to 2.4, that would breathe a sigh of relief in the market, showing that PCE is in fact coming down. Now, depending on what we get for upcoming PCE, this could likely change the cut scenario from the Fed. And now that CPI and PPI have been digested from earlier this month, we have seen the rate probabilities change a bit. You'll see that in May, they highlighted a slightly higher probability of a rate cut, although still very likely to get no cut in May, but this has ticked up a little bit. Going to the June meeting, the most likely scenario right now is a rate cut with almost a 60% likelihood. Going to July meeting, we have almost a 50% chance of one rate cut, and the next highest probability would be 2 cuts by then. And when you get to the end of the year, by the end of this year, where are we expected for rate cuts? Well, this has flipped a lot this month. And before PPI and CPI were released early in the month, the likelihood was we were going to get 2 cuts actually. But this kind of keeps flipping between the market expecting 3 cuts and 2 cuts. Right now, they're basically neck and neck, with 2 rate cuts leading by like a 0.4%. Depending on what PCE gives us, we could definitely see this go higher, or the 3 cut scenario become the most likely expectation. But it's all going to depend on upcoming inflation data. So the market will be biting its fingernails watching this Friday to see what PCE is going to give us. It would be a massive positive to see PCE come in at 2.4 or under. Seeing it at 2.5 would be basically a repeat of last month. And the positive there would be at least we're not ticking back up with all this inflation fear and tariff fear, what have you. But yeah, this is definitely something this week that's going to be heavily watched by the market and the Bitcoin miners. The market in general will definitely react to our upcoming PCE. But how are you guys feeling about this GameStop news? Are you considering GameStop now that it might be a Bitcoin play? And how do you think they're going to plan this out? Are they going to just put all their cash that they hold into Bitcoin? Is it going to be a slow, methodical approach? They should probably listen to the earnings call. There might be more details there. If I find something, I'll definitely let you guys know. Let me know what you think about the GameStop plan down below. Thanks as always for watching, guys, and I'll see you next time.